You're now part of this global organisation that you set up, I think, just over a year ago.
Yeah.
I really wanted to get back in touch with you as to how that merger has worked and have the synergies that you hoped for sort of materialised,
Yeah.
and where are the challenges that are still in play.
So we're going well. Terence, would be the biggest, most overarching comment I could make. And I think there are a few reasons for that. I think firstly, the three companies that came together, Connell Wagner, Africon and Ninham Shand, all came together for the same reason. And I think you'd know well that often mergers fail, and they fail because quite often one of the parties is desperate. But we came in as equals, all three companies, and with very strong brands and strong drivers. So I think we got off to the right start. As to the leverages, we've had some very exciting outcomes to that. And I'll just give you a few examples down here. There are three examples here that would demonstrate that. First of all, we've been successful with Vale in Mozambique on the Moatize coal project there. It's a feasibility study, but it's a massive project, and that's really leveraged the Australian skills, the South African skills. The Aurecon Channel, which is coming together of a number of mining companies here in South Africa. Again, in fact, there's probably more Australian input to that one than South African. And the third example is AusAid. AusAid are undertaking two massive programs here in Africa, and we shortlisted for both of them, as it turned out, but in particular we bid one of them. And in fact, we're just waiting on the outcome of that. And that we couldn't have positioned ourselves for that in Africa out of Australia. So just three examples of how it's working. I think overall the amount of work sharing is the other aspect to it. So not only winning, but our ability to move work from, as we currently are from Sydney, we're moving buildings work into Pretoria, highway work into Dubai from Queensland, and bridges into Cape Town. So it's really starting to gain momentum.
But you also merged at quite a difficult time in the global economy. And do you feel that had an impact on the merger, as well as has it had an impact on your order flow? Yeah,
it couldn't have come at a worse time for us, but it really, I've got to say, we used it as a positive. We've actually now come through it as a merged entity, and it's made us stronger. But it certainly hit everybody. But the really neat thing was, one of the attractions in merging was that the economies are a bit different on the two continents, if I could put it in those terms. And that turned out to be true, because South Africa slowed down a lot later than Australia and New Zealand and Asia, and that actually helped us a lot in terms of our ability to weather the storm. So we've come through it better than most. We've actually moved into the top 50 E&R companies globally, up from 52. So we've actually gone in the right direction through a difficult time. Although you're Australian, which is a first world environment, you're quite emerging market focused. Do you feel that's a key advantage going into a world where it looks like the old economies are going to be slow for longer, and the emerging markets probably are going to be coming out of this stronger? Yeah. Well, Terence, it's a good question, because we've just reset our direction for the next 5 years, a document called Direction 2015, and in doing that we checked in on that and said, well, we've been very successful in Africa and in Asia, moving into developing economies. Is that the right thing to do? And we've confirmed from an Aurecon perspective that's exactly what we'll continue to do. And it's been strengthened, as you say, by the fact that the Europes and the United States and the UKs have just got belted, and I don't think they look like getting up for a long time. And not only that, we've always felt they don't need us. There's plenty of talent there. Now there's an excess of talent. So we'll certainly continue on into the developing world. And to get a bit parochial, there's a lot of unhappiness in South Africa about how, on the contractor end of this business, things have just fallen off a cliff. We had a lot of activity in the run-up to the FIFA World Cup, and the order books were pretty full. And it was supposed to be sustained by the Eskom and Transnet and those sort of projects, but the tender flow did seem to get delayed and clogged up and bottlenecked during that FIFA period. Are you at the more front end of this, feeling that those bottlenecks are starting to open, or have you also seen a similar tightening? We've certainly watch our order book very closely, and it's interesting that if you go back in time to the recession or whatever you want to call it, it really hit us here in South Africa about last September. And for the first time we saw an order book impact there. We were able to, bearing in mind Aurecon is easily the biggest consultant here, that can be a huge strength, but it can also be a worry if the work starts drying up. But I believe that what's happened is our relationships here with our clients are so strong that the order book stabilised fairly quickly. So by Christmas time last, we saw real stability again. And right through, I can say to you that looking into our budgeting for the FY11 now, that our order book is still strong and the pipeline is still good. So we, purely from an Aurecon point of view, we're not seeing that slow down.
Where's the particular strength in the pipeline?
It's that's the good thing, Terence. It's spread. We have an evenness in our, not only our client base but also in our order book. So there's no weakness out there at all at the moment. Well, sorry, there's no weaker part at all. They're all sort of pretty even.
And finally, I mean, if you can give me some sort of idea of where this organisation is going to go over the next 5 years.
Mm-hmm. We see some interesting things emerging from an Aurecon perspective. If you take our platform now and you take it out 5 years, we certainly intend to be a lot bigger. But when I say a lot bigger within our model. We're a fiercely and a proudly privately owned company, and we intend to stay that way. Now that has a lot of good things to it, because it means our whole psyche is around the investment that we as owners have in the business. The downside, the obvious downside, is capital raising. So we can't go out like the listeds and go and buy whatever they want, and they do. So our growth has to be more targeted and more controlled and more of a merger and organic basis. But even within that, we would see a significant growing of Aurecon over the next 5 years. And I think, without giving too much of the detail away, you'll see us continuing into the developing world. You'll see us taking this mining and property business and knocking on the doors of the developed world through our skills there to get to that position of world renown. And you'll also see us into some new territories. I mean, clearly we mentioned places like Brazil. Brazil is not only emerging, it's terribly relevant to Aurecon because of its links to Angola and Mozambique. And also the fact that we have some very high level skills that they don't have in some of the areas of building and mining and so on. So I guess bigger, we're certainly not, the job's not done from any point of view, Terence. We now have a platform, but we continue to go. What we do also have to do is continue to get better at what we do. We are a privately owned company. We have stakeholders and we have shareholders who have expectations, and we have to balance those against our development needs.